Welcome, everybody. Killer here with Prince. No Dale today, unfortunately. I know he's out again,
He's getting
but
dumped on. He didn't want to show up.
he literally is getting dumped on in more ways than one. I think it's pretty rainy in Iowa right now. Dale has duties he's attending to. I think he's playing a baseball game or he's coaching a baseball game or something. But anyway, so it'll just be us. Our special guest today is Matt Khoury. I think I'm pronouncing your last name correctly, right?
Yeah, you got it.
Sweet. So, just like we do with everybody, we want to start by asking how you got into crypto, kind of give your backstory on what got you to this point.
Yeah, sure. So I'm definitely more of a latecomer to the space relative to a lot of you other guys. I think the first time I heard about Bitcoin was in 2011, and my younger brother, had a buddy who was doing like mining on a bunch of CPUs, and was talking about it all the time. And at the time, I wrote it off. The first time I heard about it, didn't really look into it. It was just like, yeah, that's kind of a dumb idea. He ended up doing obviously really well. So looking back, that's like a pretty big point of regret. Um, but yeah, I mean, it was kind of on my radar a little bit after that, but it didn't really get back on my radar until 2013, like December. And I remember the big, price run up and broke $1,000, and all of a sudden, I started getting some fanfare and some coverage, and that kind of changed the story a little bit for me and got my attention. I started trading in 2005 or 2006 when I was in college. Just equity market trading, U.S. equities,
Mhm.
kind of a little bit of options, and so I had been, trading charts for a while, and the big blow off top and everything kind of got my attention, and I kind of watched it. I watched it in 2014, and I think it was January of 2015. This huge false breakdown that recovered, went down to like 150 bucks, came back up to 200, and so I started really kind of paying attention to Bitcoin right after that. You see this massive base, a
Yeah.
false breakdown, massive base. As a trader, you kind of perk up when you see stuff like that. And it had proven that there was enough liquidity there. There was enough interest to kind of drive the price.
Hmm.
I bought my first Bitcoin in 2015, kind of as a response to that, but I didn't really know much about it. This was a straight, just kind of asset play,
Hmm.
speculative kind of
Yeah.
asset play.
Take the risk and see where it goes.
Yeah, yeah, yeah. I don't think it was until like September, November of that year that Mike Hearn kind of rage quit Core and wrote this long diatribe about how it's a failed project and all that. And that kind of ironically got my attention, and I kind of sat up and thought, well, is this guy right? Is he full of hot air? And that's when I kind of started like diving into learning about the protocol, and that's a rabbit hole that you just kind of
Yeah.
fall down, and one thing leads to another. And I've been really kind of active in the space. The thing that also really kind of brought me to the market was the hit rates. Just as a trader, again, like going in kind of objectively, without any kind of preconceived notions, the hit rates were just insane.
Hmm.
You're seeing these kinds of setups, and I honestly probably underperformed when I first got in because I'd been accustomed to a little bit more efficiency, in terms of how the price action moves.
Yeah.
And there are certain things that you can do when you're trading, alts, for example, that just don't fly in the equity market. So that
Hmm.
kind of relearning curve of kind of getting back up to speed with how the market worked, was definitely a journey. But
Hmm.
here I am today, more or less obsessed with the space, and trading a lot. So
Yeah.
that's kind of the backstory about how I got into it. I mean, we'll just kind of see where things go from here.
Hmm. I think it's funny you mentioned the hit rate thing because it's so true, right? Like, and especially when we had that, even the big bull run, I think it was just so evident. The simplest of patterns. It's just any guy who knows basic TA would see it was gonna play like 100% of the time.
Yeah,
You know.
absolutely, man. It's so funny though, because like you have a bunch of guys who are from legacy finance, and they completely just I'd be talking to guys that I know who are good traders and just be like, hey man, like you gotta check out the action going on here. It's a bunch of retail. Like, I mean, it's just everything hits, every kind of like textbook pattern hits. And they're like, oh, and it's BS. It's not worth your time. And, hey, that's your choice. Chart's a chart. If you can play it and it's liquid, go for it.
Exactly.
Have you noticed a big difference between when you started trading crypto and now in terms of the difficulty of trading the markets?
Yes. Everybody talks about, institutional money. That's like a meme, it's like everybody talks about institutional money and OTC bulls like it's Santa Claus. You know what I mean? Like it's like the opposite of the boogeyman. Like it's like the story that parents tell their kids at night to keep them bulls. But I think you see it evident in the price action with Bitcoin, especially like post CME and CBOE futures. Just even today or last couple days, you see us heading into the June expiry for the futures contract. We kind of hold and do nothing. Volatility drops. And then, going right into expiry, they kind of slam the close. And, you're starting to see that in the price action. I don't think we see that yet in the smaller cap alts, in the full crypto to crypto kind of exchanges. It's the big liquid stuff that you're kind of starting to see, the institutional kind of presence. And I think that's only going to continue. And that's a double-edged sword, I think. A lot of people talk about this panacea of institutional money, but it's like, careful what you wish for, you know?
These guys are pros.
So here's the thing, man. Like, these guys are going to play in their own sandbox, and I guess I'll circle back on that. But I think I tweeted the other day that it's kind of like inviting NBA players to your pickup game and thinking it's going to be fun. It's an interesting situation because the bigger the market, the more the competition, those edges, like your generalized edges that people have refined and worked out in this space over the last several years start to diminish, and you get kind of pushed to the edge. You get pushed to the periphery. And I think that's fine. I think there will always be, just because the freedom of the market, I think there's always going to be pockets for
constant evolution.
But the big, the big stuff and the big exchanges, you're going to see edges break down, and I think that's just just kind of comes with the territory. The paradox of it is I think it's also required as a next step to take the space forward. Yeah. So it is what it is.
Yeah, and it's really funny how, like you were saying, it was this great thing that everybody looked at and just all this big money is going to come in, and then the expectation is quite different than the reality. But like you said, everything, all these edges will wear off eventually. We're not going to see BART patterns for the rest of time in crypto. So it's not always going to be like this. I mean, some other strategy that's run by algorithms will probably take over and really be the dominant force that, it kind of controls the market. Right now, it's obviously whatever this BART strategy is. I think it's like, hey, do you have any specific thoughts on that and how kind of like established that specific pattern has been, that BART formation? I don't know what else to call it.
Yeah, I mean, you see it a lot, and that's become a meme too. And I think the way that markets work, or at least in my view, the way that markets work is, once everybody kind of sees a thing and recognizes a thing, it morphs, it kind of arbs itself away. And I think, kind of in the same vein, you're going to talk about BART patterns and kind of meme setups. I think the whole fractal game right now is really popular. Everybody's got their own version of the 2013, 2014, 2015 fractal, and like, where are we on the fractal? Yeah. Where are we on the Wall Street cheat sheet? So, I sit here and I kind of think, it could play out that way, or a version or a flavor of that way, and whoever got the closest will be like, I got it right or whatever.
Ego stroke.
Yeah. But I mean, at the same time, like, what if, are you mentally prepared if the fractal breaks down and we're no longer like, what do you do if that fractal doesn't hold anymore?
Yeah, what if it turns into the gold fractal? Then we're
Oh
going
yeah,
a
yeah.
lot
I mean,
lower. It's like,
exactly. I mean, there are plenty of other kind of like blow off top,
yeah,
runs. I mean, when gold, went live with futures, it had its own kind of
yeah, very
fractal
similar.
deal. Yeah,
Yeah.
Nasdaq. I mean, yeah, they all kind of echo each other, but I think it's
Hmm.
dangerous
Yeah,
to put too much stock into a fractal that everybody's looking at. If everybody's looking at it,
yeah.
it's not going to play out. Like that's just the way that markets kind of screw everybody over.
Hmm.
It's going to do the thing that's going to hurt the most people. And
Yeah.
markets, like, you know how it goes. Like there's so many examples of, the market can't do this and it goes and does it.
Yeah.
Just to almost like prove a point that it can do anything. And I think it's important to kind of remember that.
Yeah. I think, yeah, one way I like to put it is just always think of how could Mr. Market screw over as many people as possible. And
Absolutely, man.
yeah, and it's going to do the opposite of what the herd thinks it's going to do. I think a classic was as we were coming into the bear market, one thing I really noticed was those standard plays that were like money on alts. It didn't matter. You have your flag, you have your pennant, and you just, for many months, that was just an easy play. Well, then we started getting the breakout fake out, and it would break out and then just dump hard. And it was like, oh yeah, here we go. We're evolving now. Time to step the
Yeah,
game up.
I think a lot of that has to do with the overall kind of like backdrop of where we are, like
Yeah.
alt season, more or less, and the setups that you're hitting and all that stuff happens like within the part of a secular uptrend.
Yeah.
When you're in a secular downtrend, a lot of those patterns that you've habituated yourself to start breaking down. And, when patterns start breaking down, it's time to sit up and pay attention.
Yeah.
That's when you have to start kind of being really self-reflective on how you're approaching the market and what might have changed. It's the whole, like, it's never different, but it always is.
Yeah.
So, go ahead.
I was just gonna say this kind of reminds me. I don't think we've ever spoken about secular versus cyclical trends on this show. I think it's a really good concept for people to know about, though. So if you could just walk people through that and what the differences are, and maybe what you think we're in now in crypto.
Yeah, so this is a tricky question because how you define a secular trend is really down to your time frame. The argument could be made that Bitcoin is still in a secular uptrend, which it is if you zoom out enough.
Yeah, you zoom out enough.
Log chart, zoom out.
Yeah.
All
If
the
you're talking
tricks.
like on a weekly basis,
Yeah.
we're obviously in a secular bear market. It doesn't take much to realize that the path of least resistance is down. And I guess I think really what it comes down to, if I had to define whether you're in a secular bull or a secular bear, is liquidity. I'm a big believer in the fact that like liquidity drives all markets everywhere.
Yeah. Supply and demand.
I mean, so when liquidity is flowing into a market, you're in a secular bull trend. When there's a buyer strike or there's an absence of liquidity, you're in a downtrend or a secular bear trend, which is what we're seeing today. And that's how I'd define it. The general price direction does a lot for secular trends, but really that, again, like that's tricky coming down to how you're defining your time frame. I think it's what a lot of people don't talk about, that I pay a lot of attention to, and it might have to do with the fact that, I still trade legacy markets a lot. A lot of people kind of see crypto operating in this standalone bubble, and not bubble in the blow off sense, but a bubble in like it's isolated from other markets. And, I really don't think that's true. If we look at Bitcoin or other crypto as a emerging tech, on the risk spectrum, it's very far out there. And I think you can see it in the performance, and how it relates to the main U.S. equity markets. And the world has been awash with excess liquidity since 2009. And, that's half the reason Satoshi, released a white paper and launched Bitcoin, chancellor on the brink of second bailout of banks and all that. Yeah. We've never seen Bitcoin in any other environment. So like we had a kind of a downdraft and a bear trend 2014, 2015. But that was still within the context of this like liquidity rush in the generalized like global marketplace.
Mm-hmm.
And I think we're starting to see kind of signals from the Fed and other, you know, banks that they're starting to kind of draw back that liquidity. There's going to be liquidity withdrawal from the system.
Yeah.
And I don't know how, you know, crypto and Bitcoin's going to react. I don't think it's going to die, like it's going to survive, but I think that that's a hidden risk that people don't really kind of consider when they're looking at the greater context of this. Because like, yeah, if Bitcoin's a leading indicator and it's far out on the risk spectrum, it's kind of like a first in, first out thing where, you know, equity markets are kind of faltering right now. I don't know enough to say whether, you know, it's the break of that trend or not. But in a liquidity crunch, and people have to raise cash, you know, they sell everything, and you know they're gonna, you know, raise cash in whatever way they can until you can like pay for rent and stuff in Bitcoin, which we may get there one day. But you know, it's kind of, and not to go on too far into this rabbit hole, but you know, the corollary of that is, you know, they start raising rates, money gets tighter, capital gets more selective is what it is, and where it goes. If it's a response to inflation, then it's like, oh, well, you know, Bitcoin's this great inflation hedge. And I think it can be one day. But I think to imagine it being an inflation hedge now, with the state of where we are with institutional infrastructure, is kind of getting a little too far ahead of where we're at. I think it will be, assuming that there's infrastructure to accommodate institutional money flow. But today, like, I don't know if there's ramps available to, you know, allow Bitcoin to be like an inflation hedge in the aggregate.
I find it, like, I really like that you brought up the whole liquidity thing, and just kind of focusing on kind of even just the global trend with the liquidity thing, because it's a conversation I was having with my old man just last weekend, actually. And he was saying, you know, he was talking about this exact topic with me, and he's just, you know, he's like, well, you're seeing it in Bitcoin right now, and in a large part, it's because it is kind of a niche market, and these smaller markets, they're first to get hit typically, you know, and then it's a slow drift to the legacy markets, the bigger ones, and then liquidity, you know, all that. So obviously, because we're so small, we are going to be hit earlier than the rest, and I think that's what we are seeing in a sense.
Yeah, and I think, you know, again, like, I'm going to say some positive things here in a minute, so I don't want to like dwell on like the negative with you guys, which is easy to do when we go bear. But yeah, I just like, I think it's dangerous for people to kind of not view the crypto markets in the greater context of things. As much as we'd like to be kind of totally detached in our own world, you know, everybody's like, you know, again, like talking about memes, everybody's looking for like the new money, you know, to come in and get involved. When money's tight, that doesn't happen. When people don't feel wealthy, when people don't have money to spare, they're not buying, you know, they're not buying crypto assets. That's just, or stocks for that matter. I mean, that's just, we're all kind of part of the same family. And I think you can gain a lot from kind of taking that step back. And I know there's a lot of kind of hate in the crypto world in terms of legacy markets and vice versa. And a lot of that's justified, but I think it's a lot more kind of enriching to like at least view it, be able to kind of step back and realize where it stands within the scope of things, and not delude yourself into thinking, oh, we're going to be fine if, you know, if there's a liquidity blow up, we're going to be fine because, you know, we're crypto.
Yeah, no, I think like echo that big time, because I think, like a lot of people say, it's like, well, if we get a huge legacy market crash, Bitcoin's going to run. And it's like, well, why do you say that? Because, you know, if there's a huge crash, people are going to cash. You know, they're not going to other assets. They want to be safe. They want to hold their money. And then, you know, typically you'll probably see everything crash, right? You'll see metals go down with the market. And then after, you know, maybe they start thinking, okay, well, let's try and put a little bit of money to work. Well, then maybe you'll see, you know, silver, gold actually do a little something. But
yeah, I think like I said, I mean, there's a meme in traditional markets of first in, first out. Like in a correction, a lot of times you'll see a market leader or a sector kind of go into a correction first, the market will follow, and it'll be also the first out. Not necessarily, I'm not saying that's necessarily happening right now with, say, crypto and Bitcoin and legacy markets, but it's possible. I think it's interesting to watch. I think it's kind of interesting to watch the tandem kind of between both markets.
Yeah, that's another like favorite meme of mine is like, if you think this bull run's crazy, just wait till the regular market crashes. You guys are so clueless. Like,
let's really hope that doesn't happen.
Yeah, it's like, I don't know if I want to be around.
401k gets cut in half. Yeah, the first thing you think is, let me buy some cryptocurrency. Like, come on, guys. Just use your heads. It's like, yeah, it's a ridiculous claim.
At the end of the day, cash is king, and it's like people will argue it. They will say, we'll have the true believers of crypto saying, well, fiat is worthless, why do I want to hold that? Well, at the end of the day, when shit hits the fan, you want to be able to hold your value, and fiat is going to do that for you for the meantime. So absolutely. I'm gonna pivot to be more positive a little bit. Well, I like it, man. You're keeping it real.
Yeah, no illusions here, guys. But I think we're at an interesting point right now, kind of where we are with the price, like the 5,800, 6,000 spot for a few reasons. Like technically, like you got the W still kind of in play. It's slanting, it's slugging a little bit. But it's also, I think, important that we're at the 100 billion cap on Bitcoin too. Like right around 5,800. Like we are literally sitting on it as we speak. And I think above 100 billion as an asset class, it kind of puts Bitcoin in a tier, right? In terms of like where it belongs. Below 100 billion, that's where I think psychologically, when you're assessing it as an asset class, I think once we go below 100 billion and sustain below 100 billion, that starts, kind of becoming a self-fulfilling prophecy of weakness in the market. So we'll see what happens. But we're at a very interesting pivot point. But I think also, regardless of whether it breaks and goes down or kind of remains range bound in the fractal sense for a while, we're like coming up on possibly the greatest SAT accumulation opportunity. If you're a long-term Bitcoin bull, which I am. That we've seen since early summer last year. It's one thing to, trade alts to accumulate sats when Bitcoin's like, $1,000, $2,000, $3,000. It's another to like try and accumulate sats when Bitcoin's 19,000.
Yeah, it gets a little tougher.
Yeah, I mean, there's just a repricing. And I don't know, I don't know y'all's trading styles or, what your overall strategy is, but speaking for myself, when Bitcoin's in a downtrend, you can take advantage of that if you're a little bit longer term time horizon trading alts, which is similar to like, and I say similar, people get really mad when I say things about options that it's like an option, but it's not like a textbook option. Like sometimes people get really kind of nitpicky, but it's kind of like a calendar spread in what we see in the options market where you're selling short-term volatility to pad a further out dated, like a longer call option further out in the money. It's similar. It's a similar strategy to if you guys ever trade F pairs, like you can do the same thing in Ethereum's in a downtrend. I can't believe I just said F. I'm going to go stab myself. I'm sorry. I hate that word. But yeah, I mean, it's kind of the same idea, if you think in the long term and years down the line, it's going to be markedly higher. You can kind of look at the bright side of, alts taking runs at Bitcoin, if you will. And you saw that, in the 2014, 2015 period, Vertcoin had a huge, just massive run, all-time high in sats. I don't think, whether it ever gets back there or not, I don't know. I can't speak for that project specifically, but if we settle into a range and you start seeing alts kind of like take selective runs at Bitcoin, I think it's important to kind of stay on your toes and, you know, keep an eye on the market, because I think there's also going to be a lot of big opportunities in the bear too.
Absolutely. Like, and that's, you know, I think a lot of people who are maybe, you know, newer to the markets, and especially getting in when Bitcoin was going through the huge bull run, the rally there up over 10K to 19K. I don't think a lot of people really understood the whole thing of trading to get more Bitcoin. It was just, well, let's just trade to get more dollars. And then that whole trading to get more Bitcoin thing kind of became a meme in its own during the bull. That
still up in US dollars or whatever.
Yeah. You know, it's like, meanwhile they were really losing Bitcoin, but they were up in dollars. So, you know, now we're going to do a full circle on this. And because, like, even, you know, I was looking at my portfolio, I was like, well, shit, you know, like, I'm looking pretty good in Bitcoin value in the last, you know, 3 months. It's like, I'm not doing bad here. But then, you know, you go look at your dollar chart, your value, and it's like, oh yeah, that's taking a bit of a hit.
Yeah, I mean, at the same time though, like, that's also a mental trap. You know, and like money management and stop management is so important, because I think it's so easy to fall into either of those and self-rationalize losing positions. And just be like, yeah, but, you know, long term, I'm going to be set. And you may be, but that's not the way I trade. So when I first started trading, like I said, it was like 2006, 2007, like literally without me knowing, running straight into a brick wall. That was 2008. And I thought it was a genius. You know, I was doing really well. I was playing like really kind of out of the money call options and just like hitting it. And the big oil run up in July, like I was really long a bunch of oil stocks, and like I was really unfortunate that I was really successful right out of the gate. And
that's the killer. That is the killer.
Yeah. I mean, if I had just lost my ass right off the bat, I probably could have learned some lessons and saved some money. And I think every trader, at least ones who have been around for a while, regardless of the market, everybody has a blow up story or two. And it takes a while for you to, you know, get to a point that you kind of learn those hard lessons. And I think a lot of people, you know, are probably learning them now in crypto. But that's a good thing. I think, at least for me, there's a really kind of a good growth curve, and you know, getting serious about trading and kind of taking it as a process more seriously. Instead of just like, you know, it's fun to, you know, say like, oh, like we're all gambling and, you know, all that stuff. But at the end of the day, I think to have staying power, it really is a game of survival over a really long time horizon. And that just requires everybody to kind of come up with rules that, you know, are good for them. You know, for me, like keeping really good records makes me remember stupid shit that I did in the past. And hopefully like not repeat it.
And, you know, like I feel like, you know, being here in the market, you know, a lot of us in this market are young folks. You know, not all of us got that, you know, say trading experience on Wall Street or something like that. So experience wise, I think a lot of people, like it is the thing, right? This is a very retail driven market. So, you know, a lot of experience isn't there. And this is a market that's on steroids. So, you know, it's going to force you to learn. And it's a good thing. You know, at the end of it, you know, it gets you there. There's a lot of, you know, guys trading equities won't see market cycles like this. You know, it'll take so long for it to happen, maybe decades, right?
Whereas that's the thing, yeah. I mean, so here's kind of something that I find kind of funny about the crypto space is, like you said, I mean, you're exactly right. Cycles happen faster. It's a 24-hour market. You know, both the cyclical and secular cycles happen way faster. And I don't think that's going to change. I think markets will only get faster and faster. But like if you look at people's expectation horizons in terms of development, they are matching feet with those cycles. So phrased another way, people's time expectation horizons in the space are collapsed to such a ridiculous degree that they expect, you know, these projects to roll out development and production ready development so much sooner than what is even remotely reasonable in any other industry. And it's harder in this industry because a lot of it's, more or less decentralized. And we can debate the finer points of that, but pushing something out that, your team is distributed, or, you're lots of different stakeholders with different interests. I mean, that's really hard to do well, and it's impossible to do in a short time frame. But because price cycles happen fast, people think development cycles are going to happen fast. And so you have this mismatch between your expectations and reality, and that's, how asset bubbles happen. And we saw the same kind of thing in .com. People weren't wrong in .com about the transformational kind of element of the internet. But the reality, the reality took a decade. Like, if you bought Amazon in 98, 99, you got killed. Like, I mean, that went down from all-time highs. Look at any chart, Intel, Priceline. I mean, they lost like 90% of their value, but you weren't wrong. I mean, you were wrong in the trade. That doesn't make it a good trade, but Amazon ended up being Amazon. And, again, like Netflix, like people are like, you're going to be able to watch stuff on the internet. And so the detractors come out and say, internet, you're doing dial up. You can't do that. And they were right, but they were also wrong, because eventually that came to fruition. It just took a while. I think we're going to see the exact same thing
of just how, even, say the fundamentals might look awesome, right? And I think this is a thing a lot of people have an issue with right now in crypto, is that, oh, well, everything is so bullish. All the fundamentals, everything, it sounds so bullish. Everything looks so good, but why is the price continuously going down? And it's just a thing of, like, Amazon, or like, it might be very fundamentally bullish, but prices, they do get ahead of themselves. And, it's natural. They need to, balance again. And
coming from like trading more traditional assets where it's different, or it's kind of more familiar to value these assets, what are some of the more compelling sectors in crypto from like a valuation perspective, in your opinion? And how do you kind of value these things in your head?
That's a really hard question to answer. And I'm not sure I have like a silver bullet to address it, but I'll try. I think proof of work networks and protocols have a little bit more tangibility to like how you can assess break even cost for miners and that kind of thing. It's the closest thing to kind of intrinsic value that we can get to, but it's still imperfect. For everything else, like utility, I'm not really the biggest utility token guy. I think it kind of remains to be seen how we overcome the frictions inherent in having a different token for everything. A joke that I kind of told the other day was a guy saying, "Oh, we're going to have utility tokens for everything," and then goes and uses his universal remote at home. Like, people don't like switching costs. So not to say like you can't develop backends to kind of handle that, but if people are like pumping and dumping your utility token, use becomes kind of really, really difficult in the real world. So valuing those things is really hard. With crypto, and I'm going to be like really real here, it really, for the most part, I mean, there are some really good projects out there, but we're really just trading tokenized stories to one another. I mean, it is. I mean, tokenized white paper, tokenized story, and that there's nothing wrong with that. Like I want to make it very clear, you can be very, very successful doing that. And I think some of the best altcoin traders that I know and follow don't even like really read white papers. Like, they're not really into the tech, but they look at the token metrics. They look at the supply. They look at how the tokens are distributed. They look at the metrics. And if we're going back to your question, if you're looking at like fundamentals, like those are the fundamentals of crypto. Is looking at like supply, token distribution. The whole getting listed on an exchange play is a liquidity play. It goes back to like the liquidity. So price of an asset is simply a reflection of current liquidity. That's it. So like when you're on IDEX, filling up your IDEX bags, there's no liquidity there, But you know, when liquidity becomes a reality, all of a sudden there's going to be a step change, a repricing of the asset, and that's what you're playing, whether you know it or not. That's what you're doing, and you don't even have to really know the tech really well to be a good trader.
Yeah.
Just like you don't have to know the ins and outs of every industry to be a good equities trader.
And it's almost impossible to be. You know, there's no way you can cover even 70% of these bases. It's like,
yeah, and I think as long as you like know that's what you're doing, this is where you get into problems is when you start believing your own bullshit and you start thinking it's something that it's not. Like, we can all be honest, like, with a lot of this stuff of like what you're doing, and the guys who are really good at it kind of know that. I think a lot of people though fall into this trap, this utopian kind of utility token kind of dream.
Tokenize the world.
Yeah, I mean, just like, if you want to do that, fine, but I feel like, unless you really understand it, you're gonna get burned. So kind of coming back to the question, like, there are ways to value, like proof of work networks and kind of things that are tied somewhat to reality. The exchange tokens, I think, are really close to kind of a valuation. You can kind of get your hands on, like, say, Binance, like how much money they're making. And that's a securities token, though. So the closer we get to securities, which I don't think is a bad thing. I think securities is only a 4-letter word because the regulations have been unclear. Yeah. But once that get cleared up, I think that securities tokens, if we're talking tokens, probably have more use case and relevance in terms of cash flow than like a utility token does.
Well, like, people talk about institutional money coming in, and it's like, well, here's the thing: is these big players, they want a way to evaluate these things. Like, they can evaluate, and put a valuation on different assets within the legacy markets. They want to be able to do that for crypto too, but it's so new still. It's really hard to do that.
Yeah, I think eventually there's going to be some really good headway in that space, and there are guys who are way smarter than me who, are developing all these new metrics and kind of things, and it's going to just take time. And then, once we can like measure these things better, you're exactly right. That's going to drive a lot of the institutional kind of presence and adoption. But at the same time, it's a risk reward thing. I think once that becomes more commonplace, these edges, these asymmetric returns go down. So again, like,
absolutely,
we want it, but at the same time, like, know what you're asking for, kind of deal.
Yeah, we're in a very speculative driven market still, and that is why we were able to get the kind of gains and, well, sometimes losses that we get, right?
Yeah, absolutely.
Oh, yeah, risk and return are just so inherently intertwined in terms of investing that you can't separate them. You're kind of going to be at the mercy of whatever the market does, and whatever kind of environment you're playing in. But the thing is, we're still so small in size that these are still some of the more beatable markets. I think, even though they've gotten a lot harder, like we talked about, it's still one of the better places to be.
Absolutely.
I'm curious, Matt, like you mentioned, you still trade traditional assets pretty frequently. I'm surprised you don't find those like extremely boring after having been in crypto.
Yeah, no, and they are sometimes. To be honest, in the last like 2 months, equities have actually had probably a little bit more action than your crypto market has. But in the most times, you're right. It's a retraining. So I'm self-employed. So, I have a SEP IRA. And I can't really, I diversify assets, I'm not like 100% in crypto or anything stupid like that. So, if there's a place for, traditional kind of equities, at least to me. I still enjoy it. It's a different game. I still enjoy kind of different, businesses and sectors and the rotation and kind of getting into that. I have spent way less time in that arena in the last couple of years, just because, again, like, crypto's been a better kind of risk return setup for me. But I take a much longer term view with equities typically. Like, I'm not doing like, daily swing trades or weekly swing trades. I'm looking for a lot of like dividend reinvestment, like that kind of stuff, passive income.
Right.
Just kind of looking at it that way. So yeah, I mean, it is more boring. And I think somebody said, and I can't remember who, this is not my idea, so I'm not going to take credit for it. But back in like the 70s and 80s, is all about bonds and bond trading.
Yeah.
And then, equity trading became kind of a bigger thing in the 80s, in late 80s. And, someone older than me is going to probably come down on my timing here. But the idea is like, those crazy equities traders, the place to be and like the responsible thing to do, like all the old men trade bonds, but now like the young guys and all the young guns are trading equities. I think we're going to see a shift again where all the old guys trade bonds and equities. And then like, and you're already seeing that happen.
Yeah.
And then like, the crypto assets is going to be the thing that all the, everybody kind of looks down on and scoffs at, but it's really going to drive, that's where all the innovation and stuff is going to be, just because, the inherency of the market that it's global and 24-hour.
Yeah. And it's new, right?
Yeah, absolutely.
Yeah, the younger generation, I think, we are the younger generation, and it's new. It's a new opportunity for us. So that's alluring, right?
Absolutely, yeah.
I know this is really difficult and basically impossible, but if you had a gut instinct on what Bitcoin does price-wise in, let's say, the next month, what do you think?
Whenever...
Maybe 2 months. Make it a little bit
Not
easier.
an easy question.
Yeah, I mean, so the trend is down. So,
Yeah.
I mean, probability is we're going to be lower.
Yeah.
Now, right now, we're kind of at support. Like, do we run up... like make another run at like 8,000 and then roll over? I mean, that might screw my 2-month window a little bit. That could happen, sure. I think in a 2-month window, I mean, I'm going to side with the trend.
Yeah.
And the trend is down. I hope I'm wrong. I think it would be great. I mean, even right now, like I'm sitting here, like I got my screen up. There's still a lot of longs. Everybody's kind of waiting to see like the big capitulation volume.
Yeah. This dump is disappointing me so far. It's like I need more volume.
Yeah, there are certain things I think we all want to see, and if I'm being honest, like it's hard to say like we've seen them yet. But that would just be my guess.
It does seem like a little overwhelming. Like everybody is pretty much positive. Like, okay, here we go. We're going down, and that's just the people I've seen. But doesn't part of you want to go contrarian to that and be like, well, it's like if everybody thinks we're going to do it, what are the odds we actually do?
Yeah. I think sentiment is really hard to gauge. I think the more curated your Twitter feed is, if you follow like really good guys and girls or whatever, really good people, you're going to have really good information. And so being contrarian to that might not be smart. Crypto Twitter, I think is a really interesting phenomenon. And whether or not, like, I mean, for me, like I'm really sensitive to like being influenced by all the things that I see. As much as I'd like to think I can compartmentalize it, I don't know if I can. So like, I'm really careful about, like how much Twitter I'm consuming. Crypto Twitter is really hard just because, I don't know the background of a lot of people. And then the guys that I know and respect, like I actually, I don't feel right, like being really contrarian about them. I like gauging non-crypto Twitter for sentiment. I like looking at like finance Twitter, which is its own Twitter. And, when I get texts from friends and family and like, am I okay? Stuff like that. Like that's the kind of stuff that I think you're starting to see that. Like we're starting to see like the bear parade going on, especially like right now.
Yeah, for sure. Like close family members being like, is this it? Should we just sell it all? I'm like, interesting.
Yeah, I mean, you see all these guys taking victory laps, like making jokes, slapping high fives, Bitcoin going to zero.
And it's the same way in the bull market. It's
So that's a good sentiment indicator. And right now, I mean, we're getting there. I mean, we are getting like bear victory lap.
People are screaming it's going to zero.
I think that's more of an indication of a local low, because like sentiment alone like that is not enough to change into a bull trend. That's a liquidity issue. But for local lows, yeah, I mean, I think we're getting close to some kind of snapback just due to the sentiment out there on Main Street, if you will.
I guess this is very semantic, but doesn't sentiment precede liquidity a lot of the time?
Yeah, absolutely. But at the same time, I mean, I think you have to see capitulation. I think that there are things that can happen. I think if you see a Bitcoin ETF get greenlit, something like that, that's a game changer. But I mean, sentiment is self-fulfilling and it feeds on itself.
Yeah.
So
totally.
I think it's going to be really hard. And we're not talking sentiment for crypto Twitter. We're talking sentiment for people who have never bought a Bitcoin in their life or crypto, or we're not. I mean, I'm talking retail, and I'm also talking institutional. So we have to get to a point that like either price is so low that like institutional guys or even retail people are like, I'll take a shot at that. Kind of like, I mean, that's what happened to me. That's what happened to me back in 2015 when I was just like, well, it tried to break down to 100 and it didn't work. Now's the best time to take a shot at it, like around, wherever it was at that time. So, it either has to get so bad that the only way to go is up, which we're not there yet.
No, we could get a long ways.
or something happens that changes sentiment to the point that it's able to kind of like change the trend.
I mean, it's alarming to me though how much the market is absorbing good news. It seems like, I mean, the whole like Ethereum not being classified as a security thing, that would have sent it absolutely rocketing, And so I don't really know what it's going to take to actually jumpstart the market in the opposite direction.
I'm with you. I was actually really surprised about that. I thought that the regulatory overhang was one of the biggest hangups for Ethereum in particular. And I thought they were just going to be kind of a watershed moment. But, the market speaks all the time. And I think, sometimes we're all kind of in our own heads that we're not listening to what the market's telling us. So back in last year, SegWit 2x and all the, the wall of worry, the China ban, the sixth China ban or whatever, all this bad news is coming out. There's all this uncertainty about the protocol. And we just keep going up. And Jesse Livermore, has this quote that's not even a world war can keep a bull market from being a bull or a bear market from being a bear. Like when you're in that trend, like it doesn't matter. So when the market's shaking off good news, I mean, that tells you something. And it's the opposite of a wall of worry. So like everybody talks about climbing the wall of worry. When you're seeing all this good news, like lightning and all this other stuff like coming out and the price still keeps going down, I mean, that just goes to show you like the market's speaking. And I think we need to listen.
Yeah, the trend is down, and when the trend's down, you're just looking for short opportunities, short the bounces, and when the market's up, you're looking to long the dips.
Yeah. I mean, I think the best thing you can do. I mean, everybody kind of wants to know like what everybody thinks the market's going to do, and we could bounce really sharp here for all I know. But I think you just remain tactical, and you just keep taking really good risk reward opportunities, whether that's scaling into a long on a capitulation dump or, fading a spike, and just being kind of, really tactical. And eventually, like if you're being tactical in terms of, capitulation dumps and you're scaling in and kind of testing the waters, one of these days, one of those is going to be the bottom.
Oh yeah.
So, as long as you just kind of, remain patient and take really good, just like any other trading, bull market or bear. I mean, you take really good risk reward opportunities within the context of the market you're in. It doesn't matter. It doesn't matter what direction the market's going.
I think, it's good now for, it sucks that the market's down, people are losing money, but I think the one thing it reinforces with people is, if you're going to survive this, you better be treating your trading like a business, because it is a business. It's your own business. And I think, the bull market, it got very easy to just, who the hell cares? I'm just going to, throw darts at a board blindfolded and that's my next trade, whatever it hits, right?
Literally, yeah.
And that was the market, right? But now it is like, you got to buckle down and, so treat it like a business. It's your own business. And Got to be serious about it.
Yeah, I think at least for me, I started keeping somewhere along the line of my trading career. I started keeping really good records of trades that I entered, and I'm the kind of guy. Every year, I enter the year trying to make as few trades as possible.
Interesting.
Like that is my goal. Like I don't want to trade a lot. I want to trade as little as possible, and that forces me to be really, really selective. And I've kind of because I'm always making records of all my trades, the overhead of trading too much is just such a burden that it almost kind of prevents me from doing it. Kind of like a self-imposed control. But
even
go
myself, it was like because I've had this same thing of and you hear it a lot. I think Luke Martin says it too a lot. Is just move slower. And for myself, I can be very quick with the trigger, right? So it's like if I want to get in some or get out, I'll do it, and just moving slower. And so what I was doing is I was keeping 2 portfolios to track. And they're the same, but say, if I made a trade, okay, I would update one portfolio, but I would leave the other portfolio as if I had never done that trade. And then say by the end of the week, I would look at and see where I was. If I hadn't done anything, where is that portfolio at? And now with all these other trades, where am I at here? And then, being able to evaluate that, just because I'm one of those guys who overtrades a lot at times, right?
Sure. Did you have any, I'm just curious, did you have any kind of like insights from that, from that exercise?
Yeah. And it really, move slower, right? Just chill out, slow down. And it was an interesting one for me because I am, when I first started trading stocks, it was just, pure day trading, right? It was sitting in front of the computer and scalping moves and in and out. And then, so over the years, I've been kind of progressing out of that. But I have that natural tendency to go back to it at times, right? And especially when the markets can get a little haywire, I'll find myself resorting to that. And then I'll go look at these portfolios and it's like, if I just chill out, I'm a more profitable trader when I just sit on my hands and do nothing.
Totally. I mean, really, they say the only thing done well in a hurry is a mistake.
Yeah.
Yeah, and like it's a lesson that you have to relearn a lot of the time too, because I'm very much in the same vein where like I really try not to trade a lot, but I've had to relearn that lesson several times on the way down here where I'm like, oh, fuck it, I messed up, and then I'll wait like 3 weeks and I'll retrade, and then I like fuck up again. I'm like, oh, I gotta give it a couple months. I'm on next again, taking on stupid positions.
There's also a benefit of not trading as much, just from the fees that you pay. I don't know if you guys like aggregated your fees from last year.
I was looking at some of the fees I've paid over on BitMEX, and like, Christ, trading the Bitcoin contracts, they're not too bad, but when you get into the altcoin contracts, oh my god, it's like the fees I've paid is just retarded. Yeah, it's.
And like last year, especially, the fees that you're paying are in an appreciating asset. So if you mark that to market, like at the end of this year, I mean, that's just killer. So, I mean, if nothing else, like that should, motivate that. And that's just speaking just for me though. Like, I don't want to come out like all high and mighty saying, day trading isn't good or, trading a lot isn't good. I think, when I say that kind of stuff, I'm speaking for me and the things that I've kind of learned about myself. And, for a lot of new folks, I think that's the hardest part of starting trading is really kind of finding out what kind of trader you are. And you start by kind of trying to emulate others because that's like all you can kind of like latch onto and know. And it takes a while to kind of get to a point to like really know yourself. And that's, what's kept me trading. It's fun and it's lucrative and all that stuff. But I think it's like also kind of a really self-reflective exercise if you're, doing it right.
Yeah. It's a test on yourself. To me, it's like an intellectual battle with yourself. And I love that, because you're your own worst enemy or your own best friend, right?
Absolutely. Yeah.
Yeah.
All right, fellas, we're going to wrap it up. Matt, thank you so much for being here. Do you have any last words for everybody in terms of where they can find you on Twitter or any parting words?
Yeah, I mean, I hope that people enjoy what I tweet. I never know. My Twitter my Twitter is really just kind of like my own personal public diary. So I'm sure, some things will probably make more sense to people than others, but I try and you know, post thoughts about the space. There's really two crypto Twitters. There's like trading Twitter, and then there's kind of technologist and you know, blockchain kind of tech focused Twitter. I try and like stay more on the kind of the actual technology side. That's just, you know, I try and put out value for people, that things that I find interesting. So hopefully people like it too. But I really appreciate you guys having me on. It was fun talking to you guys.
Yeah, man, this is a wicked episode, and I think, you know, the listeners will. I've already seen comments in the chat box saying how awesome this is. So thank you.
Good deal. Good deal. Well, I wish everybody luck. You know, we'll hope for the best out there.
I'd say keep surviving.
Keep surviving. Yeah. Stay positive too. It's really easy to get negative. You know, just keep thinking positive. You know, manage your money well, and you know, you'll do great.
One last thing, everybody. I got to give a shout out. Take a look at cryptostreetstore.com. We have recently added 2 new collections, the I is Lupe collection for our buddy Senor Lupe on Twitter, and the Miami Vice collection, which has some really cool summer gear, tank tops, t-shirts, much more. Check it out, cryptostreetstore.com. Have a great weekend, everybody. We'll see you all later.